Okay, we're constantly modifying and hopefully improving our strategy and process. And I want to talk about the improvement I think I've made here with my trading strategy. I'm going to call it probably the Fibonacci strategy. This is what happened on 523 as one example. Okay. But basically what we're going to do on this channel is trade multiple strategies. And here's a list of 9 strategies that I like to use. But mostly, number one, I'm using the Fibonacci levels and support variables like trend lines and moving averages and ranges and things like that to help me make trade decisions. But the number one strategy is the Fibonacci level and support variables. Okay, and then I want to go over the strategy rules and what happens, and I'll give you this example right here. In a bullish position, price obviously needs to be in a bullish position either on the daily chart or the hourly chart. Okay, and the rules are simple. $1,000 maximum loss limit. I'm going to use Fibonacci levels to determine my entries and add to position when it goes against me 1 or 2 times only. You can't really add more than once. I'm going to try to see if we can do 2, as long as we're not trying to scam the company, Apex. I think they're fair. We'll just have to see in the future what happens. After my position is achieved, I'm going to be looking to scalp for moderate profits over and over. Since I know the day's bouncing on a Fibonacci level, I can scalp in that area over and over multiple times. Sometimes I'll take 10 trades in the same range. So we're scalping for moderate profits, looking to re-enter the trade on breakouts when they fail. When price is in a range, towards the bottom of the range, we'll enter over and over and sell at the top. When price pulls back to trend lines, internal Fibonacci levels, which you'll get pivots, high and low pivots in a trend that you can use Fibonacci levels internally as well on the lower time charts. And when price pulls back to moving averages, we will look to buy and sell depending on those variables. So this is a Fibonacci strategy using these other variables. Okay, now let's take a look at the next thing here. Here's the example for Wednesday, the 29th of May, 2024. Here you can see quite clearly price in an uptrend above the 20 EMA at the bottom there, pulling down to Fibonacci 50% level. That's the area we're looking to buy. And here's the internal 60-minute chart. With that happening, you can see it's pulling back to other Fibonacci levels in the golden zone, 50 to 60% pullback on a 200 moving average. Perfect setup, in my opinion. And here's the results of that trade that day. I'll show you what we made here in a second. Right on the moving average, right on the 60%. That's what we buy. Okay. And so what happens is it goes up and we make our profits. And here's what it looks like on the other time charts. The 5,000 tick, the 2,000 tick, the same bounce, right? And what I'm saying in terms of rebuying, if I would have bought down here on the bounce, the bottom left of your corner, bottom right corner here on your screen, if I would have bought and sold once it came up to the 50 EMA and let it pull back down, I want to re-enter that trade, sell it on the breakout, let it pull back to support, and then buy it again. I probably would sell it on the breakout and then look at how it's consolidating for another trade. And that's what we mean by once we enter the position and we're looking to buy and enter that same position over and over. Why? Because the day chart's telling us that we're in a support level. At least that's how we're interpreting it. Here's the results of copy pasting 6 accounts, 3 together and another 3 together, entering at various times different. I don't enter all the trades at the same time. I think that's fair and wise not to copy paste 20 accounts at once. And anybody that makes you do that needs to reconsider that rule, because that is not fair. It's wise to have 20 accounts that you don't blow all at once and you copy paste some of those and be careful with the others. And that's my opinion anyway. So this is how we're trading. This is our main way of trading. I like to build a position when price pulls back down And let's say it went against me. Let's say instead of bouncing perfectly here on the 200 EMA and the 60% fit, let's say it goes down. This is where, as long as it doesn't break the 100%, because down here is your ultimate support level, as long as it doesn't consolidate and keep going, or as long as it doesn't hit your $1,000 maximum loss, because that, you have to have a loss limit, you have to have protection, you have to have risk management. You can still add to the position and stay in the trade. Okay, now you have to be careful with the Apex rules. I think it's 1 or 2 times. You might want to check and read. I think it's 1 time they'll allow you to add if it's going against you. So be careful with that. But really, if you have a stop loss in mind and you never go past that, you will be safe, in my opinion. I'm pretty sure they can see that that's a professional way to trade. Okay, so that's what we're going to be doing here in the future, going forward, as part of our professional rule following and rule-based strategy. And hopefully that will be okay with Apex and continue to make us money as we copy trade onto multiple accounts at once. All right, we'll see you in the next video. Peace.